Most traders are taught a specific rhythm. The assumption is that price moves like a pendulum, swinging forward, taking a breath, and swinging again. This is the textbook ABC wave. You get an aggressive initial push, wave A, followed by a deep discounting pullback, wave B, and finally the wave C expansion. But when major institutional algorithms are in a violent hurry to accumulate an asset, they cannot afford to let the price breathe. Allowing a deep pullback means letting rival algorithms or retail traders buy in at a discount, so they alter the order flow. The moment the initial wave A push ends and sellers attempt to force that pullback, institutional buyers step in with massive passive limit orders, absorbing the sell supply. They engineer a specific structural trap known as the compressed AB spring. Left, the textbook wave. Right, live tape reality. Price forms a razor-thin horizontal consolidation on a trend line. Retail traders see exhaustion and aggressively short it, placing stops above the ceiling. This concentrates liquidity, perfectly trapping the energy of a pullback. Volatility is squeezed into a microscopic point. The market behaves like a tightly wound mechanical spring, pushed to a structural limit and ready to fracture. This sideways grind bypasses standard pullbacks to load kinetic energy directly into a breakout trigger. To trade this setup, you have to abandon standard price charts. Surface-level candlesticks are completely blind to internal order flow. We solve this by splitting raw momentum into 3 decoupled independent frequencies using a multi-histogram terminal. The top layer is panel 1, the macro trend engine, tracking wave A. Right now, it's entering a bull decay phase, printing lower bars on the histogram. Normally, macro momentum crosses below the zero line into negative territory. But in a compressed AB setup, histogram bars abruptly stop dropping. They lock tightly against the zero line. Mean reversion is algorithmically blocked, locking the terminal into a high tight squeeze. This tight squeeze confirms that the macro engine is mathematically locked at maximum tension. Panel 1 identifies hidden accumulation pinning the macro trend against the ceiling. Next, we shift our focus down to the intermediate tracking layer to measure the actual structural depth of the pullback. This is panel 2, the wave B profiler. Look closely at the visual signature. There is a complete absence of vertical displacement around the baseline, even as the price above continues to grind sideways. This flat line tells you exactly what the algorithms are doing. They are permitting zero structural depth to the downside. This exact state in the order book forms a void we call the ghost volume node. A ghost volume node provides mathematical proof that counter-trend sellers have entirely exhausted their supply. There is no one left to push the price down. When counter-trend liquidity evaporates like this, it creates a massive tactical vacuum in the market structure. The flat line in panel 2 proves the standard wave B pullback has been successfully choked out, leaving a frictionless void lying directly ahead of the trapped short sellers. With the macro trend pinned and intermediate volume dead, we need a way to time the exact moment of the break. This requires an ultra-fast micro-liquidity sensor. We use panel 3, the wave C sniper. In its dormant state, it prints perfectly quiet, microscopic dots, waiting for an influx of institutional market buy orders. To pull the trigger, we rely on a specific operational state, micro-macro divergence. This occurs when the macro wave A is mathematically decaying, while the microwave C suddenly detects a sharp, aggressive institutional hook upward. Think about the physics here. You have decreasing macro resistance and increasing micro acceleration against zero intermediate volume. This forces an instantaneous rupture of the compression zone. The trigger fires visually as an outsized, ultra-tall vertical momentum bar tearing out of the void. This sudden micro-acceleration forces all those trapped retail shorts to cover their positions at once, flooding the tape with panic market buy orders. Micro-macro divergence acts as the hidden kinetic spark. It lets you read the detonation sequence of a major institutional move, a fraction of a second before the surface price action even reacts. A strict warning before execution. If you wait for a retest or a traditional discount entry during a compressed AB setup, you will be left standing at the station. Step 1 of the execution protocol is to identify the volatility coil on the live tape. You must confirm that panel 1 is firmly locked in a high-tight squeeze and that panel 2 is showing a ghost volume node. Once that is confirmed, ignore the deceptive sideways noise on the main price chart. Shift all your visual focus down to the Wave C sniper panel. Step 2. Isolate the fuse and wait for the exact millisecond of divergence. Step 3. Execute your market entry with size, the exact moment the Wave C histogram violently expands away from the baseline. The immediate result is an explosive, vertical price breakout that shatters the compression box and liquidates every trapped short seller. Step 4 is structuring your mathematical risk. Place your structural stop loss exactly one tick beneath the absolute floor of the tightly compressed sideways box. Because the consolidation was so narrow and heavily defended by algorithms, your downside exposure is mathematically microscopic. Meanwhile, your kinetic upside is uncapped. The core philosophy of institutional trading is clear. Never treat momentum as a single uniform number on a surface-level chart. Mastering the mechanics of the compressed A-B spring and isolating micro-acceleration inside macro decay allows you to align your execution exactly with institutional algorithmic flow.